Bro, I'm not gonna lie. I'm at a point where I'm just tired of coming to the market. I don't have a plan. I don't have anything to follow. I am just coming into the market and I'm simply guessing every single day. Like I don't know what's working. I don't know what's not working. I'm hoping something sticks for that day. Does that sound familiar? Have you ever been stuck in that cycle? Well, this video is going to change everything for you. In this video, I will be showing you my exact trading strategy, step by step on how I catch Florida market setups and how I catch counter trend setups as well. There's no confusion. It's just a clear, repeatable process that you can actually follow. If you're new here, welcome. Make sure you like the video and you leave a comment down below showing me, or not showing, you can't show me, but telling me where you're at in your trading journey. Are you at the beginning stage and everything is just new and you're looking for new strategies? You're looking for something that works? Or have you been doing this for a while and you're just simply tired and ready for some change? And make sure you subscribe to this channel because you don't want to miss what's coming to this channel. I promise you, you do not want to sleep on this channel. Enough talking, let's jump right into the video. All right, y'all, so I want to walk y'all through how I caught the setup on Euro AUD. I journaled it right here. We had one loss on Euro AUD, one win. We took two setups on this pair, but I'm gonna walk you through my Florida market setup, my strategy itself on how I find my trades, and then I'm gonna show you on the second half of this video the counter trend strategy as well, how I find my trades on a counter trend scenario. So first things first, what I do is I always start on the daily time frame, since this is my highest time frame in how I trade. I use the higher time frames to give you my overall bias of the market, because like we know, higher time frame always outweighs the lower time frame structure. So wherever the daily time frame tells me if we're bullish or bearish, that's going to determine if I'm taking a Florida market trend or a counter trend scenario, which you will see how I'm able to make that judgment. So first things first, I mark off what trend are we in. In this case, we are in this bearish trend. As we all can see, we have the recent break of structure happening here, and then we had that lower high. But as soon as price gave me this break of structure on the daily time frame, I went towards my 4 hour, because like you all know, if you don't, I'm a break and retest trader. So meaning as soon as price gives me some type of break of structure, I'm looking for price to have the retest of that structure before we have that continuation move back down towards the downside. And as we're forming this break of structure on let's say a primary time frame, in this case it's going to be our daily. Once this is performed on the daily time frame, typically what will happen is at the 4 hour time frame, it will also be showing me some type of structure break of its own, while also being in sync with that daily structure as well. So in this case, that's exactly what's going on. If I go back towards the daily, we see that price gave me the closure confirming the break of structure around here, and as we confirm that break of structure, I went towards a 4 hour time frame. On the 4 hour time frame, I saw clear as day that price was in this bearish trend, and as price was in this bearish trend, we had the continuation break of structure happen around here. We see the first break happen here, and then we see the second break confirming the continuation move towards the downside. So now we have the daily time frame, which I'm going to mark this off as blue, and then if I go back towards the daily, we have the 4 hour time frame. Well, we have the daily time frame that's bearish, and we also have the 4 hour time frame that's bearish as well, right? So the daily is going to be red and my 4 hour is going to be blue. We see clear as day that the daily time frame performed the break of structure at the daily structure point. We see clear as day that the 4 hour time frame performed the break of structure also at this daily structure point, with both time frames being in sync. So now as I'm looking for the retracement back towards this zone, not only am I getting a retest of my 4 hour zone, but I will also be getting a retest of that daily structure point as well, which is good. This is what I want to see, because both time frames are in sync, performing this move at the same exact time. So now, knowing that my daily and my 4 hour are in sync, how can I find an entry zone to where I'm looking to take my trades off of? Well, I only look for the secondary time frame. In this case will be the 4-hour time frame, because I can pull this up for y'all. I trade using 4 time frames in total. So that means if my daily and my 4-hour are in sync, I look for the 15-minute and a 30-minute time frame for my executions. Here, I'm gonna show y'all this. So it's right here. So trading with the trend, I use the daily, 4-hour, 30, and the 15-minute time frame. When the daily and the 4-hour are in sync, I use that secondary time frame, aka the 4-hour, to find my area of interest, and then I use that 30 and the 15-minute for my execution time frames. So in this case, we see that the daily and the 4-hour are in sync. We just identified that. Now we can find our area of interest on the 4-hour. How do you find your area of interest? Well, we just look for the last structure break, which the last structure break was where? If we drag this over here, let's turn this back to black, we see that the last structure break in the market happens to be around here. So now if we drag this back over here, we obviously can see that last structure break taking place, which allows me to then draw out this zone like so. And if I just extend this zone towards the left, watch what we're able to identify. We're able to identify that on the daily time frame, yes, this is an area of support. It's in the vicinity of that daily structure, right? We see the daily structure. We know that this is the 4-hour zone, so we know we're in the vicinity of that zone. But as I'm looking towards the left, we see how this zone on the 4-hour is treated as resistance, resistance. If I continue to go, resistance. So it's easily showing that when price is below, we're treating it as resistance. When price is above, we can treat it as support. So I see that price is broken below. I want to simply just see price pull back towards the zone, treat it as resistance, and then have that continuation move back towards the downside. So now after I identified that based off of the 4-hour time frame, I simply just want to allow price to have this retest of that zone. Once price can form some type of pullback towards this 4-hour zone, not only are we forming a break and retest on the 4-hour, this will also allow us to perform that break and retest on the daily time frame as well, which is something that we want to see. I want to see the retest of both zones, confirming this zone as our resistance level, or confirming my area of interest based off of the rejection price will show. But before price forms that pullback, I know that the 15-minute time frame, in order for that pullback to get established, I'm going to have to see this 15-minute time frame go from this bearish to then bullish trend in order for my higher time frame to form the pullback in the market, right? And that's what we have to be patient on, because now if I go back towards the 4-hour time frame and I fast forward just a tad bit, what happens? We see that price initiated the pullback. If I go back to it, I see that price is initiating this pullback. And if I go towards the 15-minute again, I see that price also went from this bearish to bullish trend to allow my higher time frames to initiate the pullback back towards my higher time frame zone. So now my objective is to simply wait for price to tap back into my zone, allowing that candlestick to close. And that's exactly what happened. Price tapped right back into my zone, forming rejection, and we allowed this candlestick to close. As long as we see the break and retest, price show rejection, and we're maintaining underneath, trade setup is still good. And as long as we're not going to break this lower high on our 4-hour time frame, we are still valid to enter this trade for sales due to price still being in a valid bearish trend. So we see the break and retest on the 4-hour. Like we said, this allowed the break and retest to get established on the daily time frame, and it was important for us to allow this daily candlestick to close so we can establish the pullback. So now I see that off of the daily, I saw that off of the 4-hour, and I also saw that the 15-minute performed the bearish to bullish flip to allow the retracement to take place. Knowing that price on a lower time frame have to go from bearish to bullish to allow the higher time frames to have the pullback, that also means that price will have to go from bullish back to bearish in order for the higher time frames to continue this move back towards the downside. So what I'm waiting on now is a break of structure of some type of 15-minute higher low, indicating that price is now initiating a move back towards the downside. But it's important, I have to be in session in order for that to happen. So when price first originally tapped back into my zone, at this moment, I had to wait for price to form the daily stick candlestick closure, again allowing the day to close so I can perform my analysis further. So looking at this now, we now have the daily candlestick that's closed, which allowed us to see that the 4-hour structure has closed like so. And now I have to see what time session I am in. Right now it's 4 o'clock. Looking at the bottom of my screen, it says 13. This is 4 o'clock Central Standard Time in the afternoon. I don't start to enter trades or looking to enter trades until after 7:30. So like 7:45 is when I start to enter trades. That's like slowly transitioning from Asia session to pre-London session, and I like to that's what I do. I get in around Asian session, and then I carry out to pre-London where volatility starts kicking in, and then London session where the move starts happening. So that's how I trade. So right now it's 4 o'clock. I would then fast forward into 8 o'clock, and at 8 o'clock we see this bearish candlestick get established. If I go back towards the 15-minute time frame, I also see what? I see that price on the 15-minute has already performed this break of structure. So now this is good because now I can see price go from bullish to bearish, and now it's initiating that price wants to continue this move back towards the downside. So what I look for is the original break out of our higher low. As soon as price gives me the breakout of my higher low, that's when I start looking for sales. Why? Because as soon as price gives us a break, if I go towards the 30-minute time frame, on the 30-minute time frame, I typically look for, let me show you an example, like a bearish engulfing like this one, a bearish engulfing like this one right here, this one right here. In this case, we don't have a bearish engulfing, because what happens is when price gives us a break of our 15-minute lows, it typically will leave us with some type of bearish engulfing off of the 30-minute time frame so we can find our entry. That was not the case, which is perfectly fine. I continue to wait and I continue to be patient. So we know that it's 8 o'clock around here. I'm gonna fast forward until 12 o'clock. Now we look at 12 o'clock and see what's going on with the market. Well, at 12 a.m., we see that price is still moving towards the downside, not forming any type of structure at the moment. So I continue to wait. We then fast forward to 4 a.m. At 4 a.m., yes, we can see that price is pushing away from my entry zone, which is something I don't want to see. And that's another reason where I should have walked away from this entry, which you're about to see we executed on. I should have walked away because I would like to be around my entry zone when I'm entering these trades. Why? Because if I go back towards a 4-hour, we know that this zone was treated as support, treated as resistance. So in order for me to get a higher probability of this trade playing out in my favor, I would love to get my entries at this zone where price rejected not only once, not only twice, 3 times, 4 times, or 5 times, but like we saw in previous data within price, it's well over 6 times price has treated this area as resistance and bounced from it. So I would rather bounce from this zone while finding my entry than being in no man's land trying to enter this trade, which is what I did. So it's 4 in the morning, which is good. We're still in session. This is London session, so I'm still in session to trade. And what did I see? Well, on the 15-minute time frame, I saw what? I saw that price continue this bearish move. So I see the price continuing towards the downside. We have this breaker structure, and I see price now have the flip towards a bullish trend. This is good. Why? Because now I'm solely looking for another break of structure. I see that the 4-hour is still bearish. We're still abiding by that structure. We're still in our zone, well, in the area of our zone. The daily time frame as well is still in the area of our zone, still being in this bearish trend and still respecting it. So this is still good. I'm still in the green to look for setups. And so now when if I fast forward and I go towards my entry came based off of this break of structure, which you all can see. As soon as price gave me this break of structure, when we had this candlestick close below my higher low, I went towards the 30-minute time frame, and on the 30-minute time frame, I believe that this was the perfect entry because we could see the engulfing candlesticks being formed. But in this case, it wasn't. Why? Because if we look at the previous bearish candle, we've already formed the engulfing candlestick, which means in the way I trade, this trade is already taking off and we're late to the party. It didn't make sense for me to enter this trade because I typically don't enter off of the second engulfing candle. If we already have the first engulfing getting established, I don't enter off of the second candle because that just invalidates my setup. So I did that, and price did not want to continue and went directly towards our stop loss. But you can see where we drew this exit. This is when we got out of the trade. Even though price did hit our stop loss, we got out pretty early because I recognized the entry I had, which wasn't a good entry. And we can see price go directly back towards our entry zone, which is something I even called out beforehand. So now I'm still looking for setups. Why? Because if I went back towards the 4-hour time frame, and the 4-hour is doing exactly what I told y'all I wanted to see price do. I wanted to see price get back towards my entry zone, show me another sign of rejection, and then possibly leave me with an execution. We're still bearish. We're still respecting the structure. We haven't broke past my lower high. We haven't tapped back into these lower lows, showing me that the move has not already happened. Instead, price had this little minor push. We have this pullback now forming a double top scenario, a reversal sign, and we can possibly see now the next extension take place. And we're still hovering below the zone, which is good. So again, I made sure I was in a time session to trade. At this moment, it was 8, that's 12, that's 4, 8, 12. So right now it's 12 in the morning, which is good. This is the time session I want to trade. I fast forward towards 4 in the morning. Well, this is still 12. Fast forward to 4 in the morning. Boom, we go towards the 15-minute time frame. Let's see what's taking place. We have this break of structure that happened. We can see this break of structure happen around here, but it was very weak. And on a 30-minute time frame, it didn't leave me with any entry signal. As you all can see, this 30-minute candle with this wick is what allowed us to have this 15-minute break of structure. And we can obviously see that price has already left us with the engulfing. So that means our entry would be invalid, and so I did not enter a trade. So I continued to wait. It's 4 in the morning. We then went and fast forward towards 8 in the morning. We see price have the another pullback towards the zone, showing rejection. And then as price did that, I just went back towards a 15-minute time frame to see what's going on with structure. At the moment, I see that price is in a bullish trend because we obviously see price go from this bearish. I like to mark off my lower highs and lower lows. It's just easier for me to identify structure. So I see that the break of structure took place, breaking out of this lower high, now forming my new higher low being here. So now I see that price is bullish on the 15-minute. I know that price isn't ready yet because like we said, we know that price has to go from bearish to bullish on our lower time frames in order for the higher time frames to have that retest. Right now, price is bullish on the 15. This allowed the 4-hour time frame to have the retest again of this zone. So now I'm going back towards the 15. I'm simply just waiting for the breakout of my higher low, continuing towards the downside, leaving me with a beautiful entry signal, engulfing signal on my 30-minute time frame that will allow this to carry out on the higher time frames back towards the downside. So we see that price is bullish. If I fast forward, I see we have another break of structure happening here, breaking past these highs. So we see that these were my higher highs. I see the break of structure now turning this into my higher low. Now I'm simply just waiting for the breakout of this higher low. If I continue to fast forward, what happens? We have the first original breakout. It was weak, so I waited on the second candlestick, basically allowing the 30-minute time frame to have the closure. When we had this 15-minute candlestick have the closure, performing the break of structure past that higher low, I went towards the 30-minute time frame, and on this 30-minute time frame, I saw a beautiful execution where we have a bearish variation pattern being formed. All a bearish variation pattern is either it's 2 candles or 3 candles. I never trade 4 candles ever. I only look for 2 or 3 candles. So when we're looking for the variation pattern, when this happens or when it's formed, you would typically see 3 candles. This is the three candle formation, where the first bearish candle does not have enough strength to close below this bullish candle, leaving us a wick. The second bearish candle did not have enough strength to close below the entire bullish candle, engulf past the entire bullish candle, but we did have enough strength to close below the bearish candle. But on the last bearish candlestick, the third one, not only do we now engulf the entire bullish candle's wick, but we're also engulfing the second bearish and the first bearish candle, which is showing me that engulfing pattern. This is when I found my entry, and then as I found my entry, my stop loss. How do I know where to put my stop loss? Well, I start at the bullish candle that I'm engulfing. I start at the top wick, the highest wick. In this case, the highest wick was around here. Wait, oh yeah, 50, yeah. The highest wick was around here at 48.9. Once I saw that the highest wick on this bullish candle was 48.9, I simply added 5 pips towards my stop loss, now putting me at 53.9. Why do I do that? Because I'm looking at the highest wick on the bullish candle. One, this allows me to see that this was the highest point prices traveled, and I'm obviously looking for sale, so I'm not looking for price to break past these wick highs. And it also puts me back above my entry zone. Yes, it may look like a tight stop loss, but I still get enough breathing room for price to play around. If it wants to have this pullback, tap back into my entry zone once more and then drop. I give price enough breathing room to do so, right? And I've been doing it for a little while and I feel comfortable with this. This is another reason why I just add 5 pips. I see price respect my area. I see price basically give enough dancing room to where if price needs to tap back into that zone once more, it does without hitting our stop loss, and it continues in our direction. But say if price does hit our stop loss, this is a good area in my eyes to where we are just completely wrong. Price is breaking back above this area of interest where we see when we are below, we treat it as resistance. If price is above, I'm expecting it to treat it as support and then have the continuation towards the downside. And then as far as my take profit, since I'm using my 4-hour zone for my entry zone, I'm using my 4-hour lows for my take profit, which you all can see. I'm getting back a 1 to 2.2 risk reward in return. I always look to double my risk. So every trade that I take, I look for a minimum 1 to 2, but I don't close exactly at a 1 to 2. I never put a take profit because typically when I'm right about my trades, price just continues to travel in my direction and I can squeeze out more on the back end. So now we found our entry and I just simply let the trade ride. I don't monitor it because I set up my stop loss and we just continue to let this trade ride. Boom, we would have saw price hit your take profit and you would have been out this trade with ease. Yes, you can see this exit sign, but I'm not going into full detail about that. If you want to learn more about why I put that there, join the Discord down below. I go over everything and giving more context behind the strategy itself. So we found this entry, we won this trade, and that's exactly how I do so every single day in the market. It was a very, I feel, simple, because only thing I'm looking for is the daily time frame and the 4-hour time frame to be in sync as far as presenting me with the break of structure on the daily. And as soon as price gave me this break of structure, I wanted to just see if the 4-hour was doing that same thing, in which you all saw we were doing the same thing on the 4-hour time frame, which then allowed us to identify this zone that was in sync with that daily structure zone, both time frames being bearish. And we're simply just looking for the secondary time frame, like I showed you around here, identifying the secondary time frame's area of interest, which is what we did, allowing price to have the pullback towards this area of interest, which will automatically allow you to see this on the 4-hour and allow the daily time frame to form the break and retest as well. And as price is forming the retest of this zone, we know that our lower time frames, such as our entry time frame, 15 and 30 minute, we have to see price go from this bearish to bullish trend to allow our higher time frames to have the retest, and then see price go from bullish to bearish to allow price to carry out this entire move back down towards the downside. So that's how we found our entries with the Florida market. Now I'm about to show y'all a couple examples on how I found my entries with counter trend trading. So give me a second and we're about to get into those as well. I also want to show y'all that I do have 5 scenarios bullish, 5 scenarios bearish to where I'm looking to execute the market. So we have 5 bullish examples. These are all examples that start on the daily time frame, because I start from the daily time frame to understand what direction price is moving in. So we obviously just broke down the flow to market bearish example. This would be the bullish flow to market. And then we have 3 counter trend examples where we see price getting back underneath our resistance zone or our area of interest. Instead of treating it as support, we're now back underneath, and I want to see price treat this zone as resistance once again. We have the second example, counter trend example, where price shows us the break, the retest of this zone, and we have the push back towards the upside. But instead of us breaking past these highs, we find rejection, and I'm looking to take price back towards the downside. And then we have the third example where price originally gives us the break of structure, but before we have the pullback towards our zone, I'm looking to take price from these highs back down towards the lows for a counter trend opportunity. And then the last example, I don't count it as a counter trend opportunity because we're still looking for buys in a buying market, but we use a counter trend strategy in order to execute on this trade due to price being below our recent area of interest, like I said, being found on the daily time frame. And then you have the same thing with a bearish example, flow to market, counter trend, and then counter trend strategy is used on the last example. So now going back towards the charts, we see what? Well, first things first, we're on the daily, we got to mark off our structure. On the daily time frame, I see that price was in this bullish trend that then went bearish, and as price went bearish, we broke back underneath our zone. If I drag this over here and we just map it out, I see that the break of structure happened around here. We can mark this off as their daily. We then see our daily highs being here, and then we see our daily higher lows being here, right? We see this clear as day. There's no if, ands, or buts. We see the break of structure take place here, which allowed us to establish our higher low. We then see the retracement around here, which established that higher high being the highest point in the market before the pullback established. And then we see price get back underneath our recent zone, treated as resistance. We see price get back underneath that zone, and now we're reaching this area once more, possibly treating it as resistance. So now we have that mapped off. I can then map off my higher high. I can map off my recent break of structure being the daily structure, and then I can map off my higher low. So if we delete all of these now, we have a clear indication of what's going on with price action. Yes, we're bullish, but we're now back underneath our zone that's recently treated as resistance. If I zoom out and I look towards previous data, we see that same thing happened before, where price taps back into this zone, that daily structure, and we find rejection as resistance, 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 right? So it's a strong area treated as resistance. I want to see price bounce since we are below and go back towards the downside. So before I start looking for entries, since this is a counter trend opportunity, a rejection is cool, but I want to see an engulfing take place. Why? Because with an engulfing taking place, like we just recently broke down, when we see an engulfing, it's indicating that price wants to continue in our direction. So if we're seeing our entry signal from a higher time frame standpoint, that's just an added influence of price going in our direction. So instead of me breaking down the charts right here, I was patient and I wanted to see some type of engulfing get formed. Boom, we fast forward, that is exactly what happened. We see a bearish engulfing. So now we see a left head and a right shoulder concept showing me a head and shoulders. Again, another reversal pattern. And we're looking to get in on the right shoulder. So as soon as we see the rejection, when price tapped back into this daily structure, I was waiting for this engulfing. And as soon as price gave me this engulfing candle, not only is it now indicating that we have selling pressure from this zone, but it's indicating what else? Well, I dropped towards a 4-hour. That bearish engulfing has allowed my 4-hour time frame to perform a break of structure around here, which we can see. I'm not going to use that tool. I'm going to use this tool, which we can see clear as day, this being a 4-hour break of structure. We see that price was bearish. then price went bullish, having the continuation, and then we had a flip giving us the breakout of these higher lows. And this all happened based off of the daily time frame, forming that bearish engulfing. So this bearish engulfing not only allowed us to see selling pressure from this zone, but it also allowed us to perform the break of structure on the 4-hour time frame. So as soon as I saw this break of structure on the 4-hour time frame, obviously I know that the daily is not in sync because the daily is bullish, my 4 hours bearish. The next time frame I want to see be in sync is my 1-hour time frame. So when I'm looking for my strategy, I guess you can say, in a market, I either look for the daily and the 4-hour to be in sync. Like you all know, those time frames being in sync will be us catching a flow to market setup. But say if my 4-hour and my 1-hour in sync, this will be a counter trend setup. So in this case, I see that the 4-hour is bearish, establishing the break of structure. I went towards my 1-hour time frame, and on my 1-hour time frame, we're doing that exact same thing. We see price go from this bullish to then bearish trend due to the first break of structure happening around here, and then we see the second break of structure taking place around here, right? And we're going to leave this black and we're going to go back towards the 4-hour, and we're going to map off structure as well, but we're going to change it to, let's put it as red. Put it as red since we're bearish. So now if I go back towards the 1-hour, what can we see? We see that the 4-hour, being this red line, we see that the 4-hour has performed the break of structure around there, right? We see this move happening, and then as well we see the 1-hour time frame also performing a break of structure around here. Both given time frames are performing the break towards the downside at the same exact time. We see the 4-hour structure, we see the 1-hour structure, both time frames being in sync, headed towards the downside at the same time. That's what I want to see. So this is good. So now I know that my 4-hour and my 1-hour are in sync. Now my job is to find my area of interest, or aka my entry zone, where I can see price pull back to, and then we can have the continuation towards the downside. This will be found on the 1-hour, since it is the secondary time frame that's in sync with the primary, in this case, which will be the 4-hour. So now how do I find my area of interest? Well, it's just simply the last break of structure. We've already identified the last break of structure was here. So then we just map it out. We draw out our area of interest like so, and then we just make sure this is a well-respected zone by looking towards the left at previous data. When we look at the previous data, we see that this zone is treated as support when price gets above, and then we see this zone also get treated as resistance when price is below. And what is taking place right now? Well, price recently just broke back below, so I would love to see price pull back towards the zone, treated as resistance, and then have the continuation back towards the downside. So what do? I simply wait for that to take place. Again, like you know, we are break and retest traders. So on both time frames, I will have to allow price to have the retest of the recent break of structure. On the 1-hour time frame, that retest will be around here, and on the 4-hour time frame, our retest is basically already going to be happening as price forms the retest towards the 1-hour zone. We see that the 4-hour zone is around here, and by the time price is forming a pullback and aka forming a retest, we will be above my 4-hour structure point, which is fine because I'm not trading the 4-hour zone. I'm using my 1-hour zone. So as long as I'm below my 1-hour zone, everything's going to be good. So as I fast forward, what happens? Price initiates the pullback towards this zone. But before we tap back into, what time frames am I using for execution? Well, 15-minute and a 5-minute time frame. Knowing that I'm using these two time frames, I will have to go towards my lowest time frame, in this case the 5-minute, to make sure we're going from a bearish to bullish trend, to allow my higher time frames such as the 1-hour and the 4-hour to initiate the pullback and the retest. If I go towards the 5-minute, that is exactly what's taking place. We see clear as day that price was in this bearish trend that then flipped bullish to allow the higher time frame to pull back towards our entry zone. We see that the 5-minute is bullish. We'll go back towards the 1-hour. The 1-hour is still bearish, but we see how it's initiating a pullback based off of the 5-minute going from a bearish to then bullish trend, which is good. So now if we continue to be patient and we allow price to tap back into, Boom. We see price tap back into our zone. We allow the 1 hour to have the break and retest. If I go towards the 4 hour time frame, we see that the 4 hour has also had the retest of its zone, but most importantly of this area of interest. Again, we can see on the 4 hour this zone being treated as resistance, support, and we are now tapping back into to potentially use it as resistance once more. So now we see that price is at our zone. We're at our entry zone. We are ready to go. Not just yet. Why? Because, like I said, we have to make sure we're in the right time session to trade. At the moment, when price formed this pullback, we see that price is, what is this, 8 o'clock, this is 12, it is 4 in the morning, so this is good. This is London session. We can start looking for entries. But if I'm being honest, I'm asleep at 4 in the morning. I get up around 6 in the morning, so I will have to fast forward 2 hours. Right now it's 4. If I go towards the 1 hour and we fast forward 2 hours or 2 candlesticks, that'll be 5 o'clock, and then it will be 6 o'clock in the morning. So now it's 6 o'clock in the morning. It's pre-New York session, and I'm up looking at the charts, monitoring the charts. So now it's about us making sure that price, one, stays below my entry zone, not getting above, because I don't want to see price above because I know it treats it as support. I want to see price below because I know it treats it as resistance when we are below this zone. And then two, I want to see price on the 5-minute time frame go from a bullish to bearish trend, allowing me to see that price is ready to continue this move back towards the downside. So as I map off my structure on the 5-minute, I see that my higher high is around here. I then see my higher low being here. And only thing I'm doing now is I'm simply waiting for price to show me the flip back bearish to continue this move back towards the downside. Like we know, we have to go from bearish to bullish to form the retracement on the higher time frame. We now have to go from bullish to bearish on the 5-minute in order for the higher time frames to carry out this entire move. So if we fast forward, like I said, it's already 6 in the morning, so we're good to go to start looking for positions. We fast forward, what takes place? We see a breakout structure towards the upside. So we can now transition to this. We'll transition this to being our new higher low. We see that this is the breakout structure. I'm simply now waiting for the break past my higher low. As I continue to fast forward, what takes place? We then see our new higher high get established around here. So I can then mark this off like so. And if I continue to just be patient, fast forward and see what price does. What happens? Price gives us a wick towards the upside, showing us the rejection towards our highs, and then price forms this beautiful bearish candle. One, breaking past my higher low, showing me the breaker structure, and as soon as price closed below, confirming the breaker structure on the 5-minute, I went towards the 15-minute time frame for entries. On the 15-minute time frame, I see that left me with a bearish engulfing. Because of this bearish engulfing on the 15-minute time frame being established, I know that this has confirmed the breakout on the 5-minute, which we all saw. So now I found my entry. My stop loss is where? At 45.9, which means if I subtract 5 pips, I should be at 40.9, being the highest bullish wick. We can see that was the highest wick on that bullish candle, and like I said, we add 5 pips, which puts us at 45.9, just giving price enough breathing room to fluctuate, if you will. So now I have my entry, I have my stop loss. Where do I put my take profit? Well, on a 1-hour time frame, I know that I'm using my 1-hour entry zone as my area. Well, my 1-hour time frame as my area of interest. That means I use my 1-hour lows right here as my take profit, right? You can see I'm getting back a 1-to-1, which is not good. I want a 1-to-2. So what do? I just simply adjust my take profit until it's reading a 1-to-2 risk to reward in return, like so. So now we have a 1-to-2, we have our entry, we have our stop loss, and what do we do next? We just let the trade ride. So if I fast forward, you see how price almost hit our overall take profit around here, but it did not happen. And price then had to pull back all the way back towards our 4-hour zone, basically towards our entry level. But I'm not worried, because I say it all the time. When I'm entering a trade, I'm entering the trade because I trust in the analysis that I have broken down the market. I believe that price is going to continue my direction. I don't put my trades at break even. I'm either right about the setup or I'm wrong, and I fully take responsibility either or. If I'm wrong, okay, I'm wrong. Price didn't want to pay me. Did I follow my rules? Yes, and that's all I care about. If I didn't follow my rules and I was wrong about this trade, I know exactly what happened, right? But if I lose this trade and I follow my rules, it is out of my hands. I followed the rules and I allow price to continue to do what it do. I was just completely wrong about this setup. And now for take profit, like I said, I don't put a take profit. I just allow price to run. It's because if I'm right, I can squeeze out more. In this case, price hit my targets. I could have squeezed out more because we did close below my profit level. But if I go towards the 4 hour, the reason why I didn't want to hold this trade anymore was just based off of this huge wick rejection price showed me on the 4 hour time frame, which just pushed me into closing. It didn't show me that it had I guess the volatility to continue towards the downside, but it had that slowed down momentum based off of that wick, which pushed me to closing this trade for a 1 to 2 exactly. This is how I find my trades in the market. Again, it is a very simple concept of allowing the daily time frame to tell me everything I need to know. Let me know if y'all want to see the examples of, the rest of the examples of the counter trend opportunities, and I will be more than happy to record that for you, showing you how to apply these steps to catch these setups. Again, just looking for price to form the rejection and then have the bearish engulfing. Once price forms the bearish engulfing, we'll do the same exact steps, which we just did right here to find this entry on the rest of the pairs. So, well, the rest of the setups. So yeah, we simply identified structure on the daily time frame, allowing us to see that price is getting back underneath this resistance zone, well, a previous zone used as resistance / support. Once I saw price tap back into, we simply wait for the engulfing signal. Again, this is an indicator that's an added influence that price is going to continue in our direction. Once we had that, we went towards the 4 hour and we saw that this has allowed the 4 hour to perform that break of structure. As soon as price gave us this break of structure, I then wanted to identify, well, is the 1 hour in sync with the 4 hour? So when we identified the break, we went towards the 1 hour and we were able to identify that price was indeed in sync with the 4 hour time frame, which was good because now we find our zone based off of the secondary time frame being in sync. We look for the last break of structure, map out that box, and we just make sure that price is respecting this zone, treating it as resistance / support based off of the amount of rejections. We saw that price was back below this zone and we needed price to have the retest of here to possibly treat it as resistance. And we know that in order for that retest to take place, that 5-minute time frame had to go from a beautiful bearish trend to a bullish trend to allow our higher time frames to perform the break and retest and look for the break on the 5-minute time frame back bearish in order for us to carry out the entire move on our higher time frame. So this is how I find my entries with the floater market, with my counter trend opportunities. And like I said, if y'all want me to break down some more counter trend examples, let me know in the comments down below and I would be more than happy to do so. But this is how I trade every single day using these steps, and in my eyes, keeping trading extremely simple. I'm able to predict these moves in the markets, not by what's going on right now, but by using previous market data that has already shown me. I'm just using price action to my advantage because what happens in the past typically will happen in the present. Why? Because history always repeats itself, and that's what I like to trade. History repeating itself. If y'all enjoyed this video, make sure you like, leave a comment, and subscribe so you don't miss further content. That is it for this. I pray that you all enjoyed, and I'm gonna catch y'all in the next one. Peace.